Day everyone, welcome back to our Legend Lifestyle. So today I'm gonna give you a strategy that you can use to trade synthetics. I mean, I'm not giving you this strategy for you to just go and take every trade out there, but I'm giving you this strategy because it really amounts to something if you treat it with respect and you use everything or you do everything the way I tell you, and you have to have this mentality that when you're doing something, you want to grow into it. You want to grow. I mean, if I give you something, it doesn't necessarily mean you just have to copy and paste. You want to like understand what you're doing. You want to understand why you're doing what you're doing so that it helps you in the long term. So I'm not going to confuse you guys with big words or anything because I don't know some of the words that they use out there. So, or most of the words, but I like to understand what I'm doing. That's what helps me. I don't just draw a line. I don't just, if I draw a line this way, let me make an example. If I draw a line this way, I want to understand why am I putting it there? Why am I putting it there? Why not on that close there? Why not on that close? Why not on that open? Why not on that open there? Like I ask myself these questions because those questions help you notice, they help your vision. You train your vision to spot things before they happen. So today I'm gonna be emphasizing more on that also as I tell you guys how to trade this way, right? So I'm on the 1 minute time frame. 1 minute time frame. 1 minute time frame. So the first thing you want to do, you draw it down. You want to find an area where price went high, right? Went high and then it dropped again down. And then after that, maybe it went high again, right? So you wanna find a area where you can draw a trend line like this. You want this. The first two, it has to be like this. Let me try to highlight it for you. It has to be one, right? One, and then two. Okay, no. That doesn't count yet. So your two would be the second touch, right? Then once you see price moving higher, then you know that you have your first touch, which is one, and then you have your second touch, which is two, right? So you want to see this, right? You want to see this before you even consider to trade this. I don't know if you call it a pair or whatever, but on whatever synthetic you're trying to trade, this works, right? So you would want to see this, and then after you see this, you want to clone. You want to clone what? You want to clone the trend line. You don't want to make a mistake when it comes to that. And then you want to put it on that. So basically you want to see an M, right? A trendy M, whether it's a downtrend or an uptrend. You want to see this and vice versa, right? So you want to see the first touch, which is here. At this point, the moment there's a first touch, you don't really know if you have to pay attention. So you just have to keep your eye on the market. And then the second you see your second touch, and then you see the market going higher, then you know that there's a chance. And I'm going to teach you guys how to draw this trend line, or how I draw it, because a lot of people draw it their way, it works for them. So I'm going to teach you guys how I draw it, and you can try it out, back test it, and then see if it works. So yeah, so this is how I would be drawing it. I'll show you in a few. So yeah, you want to see this, right? And then the moment you see price going up, to that level which I told you about. This one, this level, your mid. So I'm gonna say mid level, right? The moment you see price going up to that mid level between your 1 and 2, this is where you want to trade. This is where you want to trade. There's also something that we are going to be looking for. This just helps you to understand what you're looking for, but if you find this thing, it doesn't necessarily mean you are gonna have a trading or a trade on that day. No, the trade can easily just maybe move a little bit down, but most importantly, just notice that you are going to have a market that's going to react most of the time, so you have to be careful. So you might get something like this if you don't know what to look for, and if you don't use a proper risk management strategy, or your risk to reward ratio. If you're not using it correctly, you are going to have some problems. So it is very important that you respect the whole system for you to become profitable, because I also make mistakes. You're not going to get it perfect all the time. You are going to make human errors. You are going to rush into trades. So what helps you in those particular days is if you're using a proper risk management strategy, right? So yeah. So let me remove that because I don't want to confuse you guys, right? So this is what you're looking for, right? So now let's move to real world charts. So going into real world movements, well, it's not really real world, but but yeah. So what I'm gonna be looking for right now, you're gonna be looking for something like what I just showed you, right? So this would be your first level right here, this one. So a lot of people usually draw their lines like this. I won't say a lot, but a lot of people that I've seen, or that I know, they like to put their lines on that tip. On maybe I'm wrong, but usually I like to put it on that previous. I look at that high, right, and then you want to draw it on that previous bullish close, that previous bullish close candlestick after it went down, before it went down. So this is the bullish candlestick I'm talking about. After it created that close, it went down, right? So I put it on that close, and then here you want to look at the same thing, bullish close, right? So you put it there. This is how you should try it, or this is my opinion on how you should try it, because I feel like when you do this, you really filtering out a lot of errors. I feel like it filtered a lot of mistakes for me. It really does. And then you're gonna clone it. You're gonna put it right here, midpoint. You do the same thing on this bearish close, right? See what happened? It respected it, and then it went higher and whatnot. So yeah, you see what happened. So it's very important that you don't just trade once you see markets reaching this level. So it's a good example to get a setup like this, because it helps you to understand that it's not every time that you're gonna get this market structure, and also finding a trade that day or in that hour or in that whatever. It's not all the time that you're gonna get a trade, right? But let me show you one thing, right? What we're gonna do, we're gonna move back now. We're gonna move backwards, right? Remember what I said. If we do have this and that, which gives us what? Parallel levels, right? So we're gonna draw our trend line, but this happened before this. So yeah, I hope y'all are following. I want to show you that we did have a trade on this particular setup. It's just that now I was looking at the wrong one, right? The one that happened after, not the wrong one. So yeah, we did have a trade before that. So this is the one that I'm trying to, you see. So this is your first one, right? 1 and 2. So let me remove that. So now I'm gonna clone this one. Okay, let me fix that because we want it to be perfect, right? Yeah, as far as I'm concerned, it's perfect enough. So we want to clone this, and then we want to put it on that mid one, exactly on that bullish close right there, right? So we have your 1, your mid level, and then you have your 2, then you had what? See how you're getting it now. So there's a lot of ways to look at how you can trade. So first of all, I don't like to use this level as liquidity. You would want to use the present levels to really understand if the market is really ready to go down. So what you want to do right here, you want to have a level that's going to be broken, you know, in terms of liquidity hunts and all that. So you want to play it safe. You don't want to just enter a market just because you're starting to see a rejection. Nope. The moment you see price getting closer to this level or touching this level, you put a line. That line, you can write it as liquidity or whatnot. You can write liquidity. You can write liquidity, right? Okay, let me fix so that I can also write. So yeah, you can just write it as liquidity because you want the market to exhaust itself before you want to go in, right? You don't want to just come in and now you're the liquidity. No. First thing you do, you put the line. Whether it touched or it didn't, you put that line. If it's closer to that trend line, right? And then after you place that line, you see what happened. The market went down, and then it broke this price right there. And then you don't enter after liquidity is taken out and then you see a rejection. No. You want the market to break structure, right? You want that structure to be broken, right? You want to see that. That has to happen. So what happens now? Market structure broke. And you don't want to see market being broken like this. No, you want to see that push. You want to see volume kicking in. You want to see that push, that pressure just breaking this structure. You don't want to see like movements like these, no. Because the moment you see movements like this, like small candlesticks breaking this level, it's also a sign telling you the market is not trying to go down. It's also a sign. It's also a sign telling you that the market is not trying to go down as yet. So you will really want to see volume like this, like big ass candlesticks just dropping down. See, on this case, you start to understand that the market is ready to go down since it has taken liquidity not once but twice, right? These guys right here had been taken out also. So after this was taken out, that was taken out, that was taken out, finally we get what? Market breaking this with a lot of volume coming in, kicking it, right? And then that's not it. We're not yet ready to trade. We want to see what? We want to see that volume fair value gap. We want to see that fair value gap. Because obviously when the market pushes really fast trying to break this, it's going to leave these kind of gaps. It has to. If it doesn't, then there's something wrong. You shouldn't be interested in that trade. But typically the market is trying to, really drive the price down, or it's really trying to cause people to lose their minds, so there's going to be a lot of pressure just kicking in all of a sudden. That's typically going to happen. Most of the time, not all the time. Sometimes you are gonna get a trade that's not gonna do this, but trust me, this eventually happens if you're patient enough and if you're disciplined. You don't just want to make money, you're really doing the right thing. So you are gonna find something like this almost all the time. And then what do you look for after that? Price to come back. And another thing, I usually don't trade when the market just enters this block. Just because it entered and you got this, now you just jump in. Nope. What we do, we wait. We want to see an engulf. And the engulf we're looking for has to engulf. It has to be a strictly solid engulf. In this case, we saw this thing, right? We saw this bullish candlestick entering here, and then a bearish came in. It didn't necessarily engulf it, right? So we're not gonna enter because it didn't engulf it the way we want. We want this to be like that, right? So for that reason, we didn't enter. That is why you see the market is delaying right here. Why? Because of that reason, right? Prices are failing to engulf for some reason, and we need to use that as a safety net, because with trading, if you make a single mistake, that can cost you, dog. That can really cost you. If you make a single mistake in trading, that can really cost your whole setup. So that is why I'm saying you need to be disciplined and you need to ask yourself these questions before you enter. Just because you're seeing price failing to go higher, it doesn't mean you should just trade it or you should just place a position. No, you should ask yourself, why is it today that the chart are not reacting the way it reacted last week? Why is it not reacting the way it reacted yesterday? Why is it not fully engulfing this candlestick? Why is it? And the moment you ask yourself those questions, you are able to wait and not just go in, but to really understand, right? And then see what it did. It delayed, it went back, pushed higher, right? Because it knows a lot of people trying to enter the trade really early, right? So what happens when you enter early? You're not gonna be able to afford. You're not gonna be able to afford this trade because now you're over leveraging, and now you're thinking, nah, got it. But this thing is just a trap for you. This is a trap for those people that are over leveraging and all that whatnot. This was a trap. The market hasn't decided yet, right? That's how I see it, because it's not what I'm looking for right there. I want to see this. So you see what happened. The market dropped, delayed, and then eventually pushed, taking out people that were over leveraging, whatnot, or just creating a lot of confusion for people, right? So yeah, so this is what we want. After the market took out those people there, we're seeing what we're looking for now, which is an engulf, right? And then this is where we want to enter, right? So this is where we want to enter, and your stop loss should be at this previous high tip right here. Weak. You want to put your stop loss right there. So this would be your stop loss right here. This would be your stop loss. This would be your stop loss, or slightly higher. Whenever, if you want to put it a bit higher, you're more than comfortable, but I prefer to put it here, right? You can put it a slightly higher depending on your account and how much you can risk, but it has to be, but yeah, I prefer to put it on that weak tip, that tip right there. So yeah, so now that we have confirmed our stop loss, which is very important, we want to enter our trade right there. So our trade would be right at this engulf. After that engulf right there, we want to enter there, right? So your stop loss would be and then you would definitely target this, but this wouldn't be your only target, right? So we have to also manage the trade. But let me just adjust this so you guys know where to target. This is your overall target, right? if you're willing, you can target more than that. But if you're managing the trade, well. But I feel like for beginners, for now that I'm just showing you guys this, you need to just target that. And remember, we're trading the 1 minute. This is the 1 minute strategy. We haven't changed anything so far. So yeah, that's what we're targeting. But if you're managing the trade correctly, I'll show you how to manage it. So what we want to see here, you see how price is also respecting that fair value gap here, not just there, but even here, price is really thin. That's also another confirmation, because it's also creating what? It's creating resistance, a downtrend resistance, you see. But it's not gonna be like that all the time, so let me not confuse you guys. But this can also play as a confirmation, right, for this kind of trade, right? So yeah, I mean, we are gonna do a lot of examples in the future, but for this one, you can see how this all adds up to this movement right here and how it just drops after that, right? So yeah, so I'm gonna remove this so that we don't have a busy chart. Do what you're gonna do is that you're gonna take your Fibonacci, right, and then you're gonna measure from that stop loss tip right to your previous to that previous swing, right, which is here, this tip here, right? You want to measure from there to there where you drew your trend line, the parallel level where you drew the trend line, right? So you want to measure from there and that tip. So you want to target your midpoint. So what I like to do is I wanna put a line right here, so I can remove the Fibonacci right here, so that I know this is my midpoint between that where the market started turning and where I'm targeting, right? So what I want to see price break below this level. You don't want to see price resisting in this level. You want to see price breaking low at this level. If you see price touching this level, you can play it safe. You can reduce your loss, right? You can reduce your losses. You can put it at this tip right here. You can put your stop loss right here, or you can still leave it. I usually leave it, I won't lie. So this is what you can do. Sometimes I do reduce it if I'm feeling like I risk too much and I'm not trying to, feel like I know everything, man. You don't really know when the market is gonna turn, but you're definitely gonna get a reaction. Once you get all these confirmations, you most definitely, not all the time, because you do make mistakes, right? Just to put it out there. But if you do wait for the right setups, you're definitely gonna get a reaction. But it's very important that you are wise enough to understand that you're trading with real money. If you are, and I'm not encouraging it for you guys to go out there and trade with your real money. I would definitely encourage you guys to go out there and do demo trading and just practice what I'm teaching. And then when you are comfortable enough, then you can try it, But for now, this is my advice to you. Once you see price touching this midway point, it's either you wait or you reduce this, right? You wait or you reduce this, because there are cases where price just takes this out, then it goes down, right? Not every day is the same, and then there are gonna be trades where it never goes back to that level. So if you feel like you don't want to take that risk, you can just leave it there, right? So yeah, and then what you want to do is wait until the market closes below this level with a candlestick, with a bearish candlestick. You want to see it closing below. The moment you see our price closing below this level, then you want to break even. You want to just break even. You want to just break even. You understand me? You want to just, at this point, if the market goes back, you got nothing to lose, you know. You got nothing to lose. You just want to just relax at this point, right? And then from here, you just wait. You can do whatever you want to do. You can go watch football, go watch whatever you want to do, or just go have some time off, you know. But from here, you can just do whatever you want to do. If you come back and then your stop loss has been hit, it's fine. It's not the end of the day. You are gonna get a trading like this, a trading setup like this one where it just breaks this thing and then it just drops, and see how it dropped. You see how it dropped. So this was a let me measure the risk to reward. So this was a 1:2 right here, an easy 1:2 on the 1 minute time frame. So I mean, it's not that easy. I feel like the most difficult part is just taking this thing in. That's the most difficult part. But if you really, really take in what I just showed you, I feel like this can really help you when it comes to trading synthetics, you know. So yeah, subscribe if you got this far. There's a lot of trading setups that I'm gonna share with you guys for free. It just costs you time. And if it's your first time looking at synthetics, I'll leave the link in the description. And feel free to like, it really helps the channel reach a lot of people who are searching for this valuable information. And don't forget to subscribe, a lot more hard content coming up. Love you guys.